Hi everyone, my name is Odwa. I'm senior sales trader here at Thrive, and I've got my co-host Shaun.
Hi everyone, I'm Shaun and I'm one of the senior sales traders here at Thrive.
Perfect. Now, what we're going to be touching on today is geopolitics across the world, and I want to start off with the United States, right? United States this year had a lot going on. We've got the interest rates, we've got the inflation, but most importantly, I think it's going to be the elections in November that's going to be an issue. And while we're looking at that, we see that with the elections, there's going to be another rerun with Biden and Trump. And those are the two front running candidates at the moment. And that's what we're going to be talking a bit more on, especially with these two. The big thing with them is the sanctions and tariffs that they currently have across many regions and how that could possibly affect the markets. When we're looking at the tariffs, we see that they have tariffs in China more specifically, where they increase the tariffs by 15%. And it's about 200 billion US dollars in Chinese goods, which Donald Trump, when he was still president, he imposed them. And it covered certain sectors such as the consumer electronics, industrial, commercial, chemicals, health and safety, and of course we have the EV tariffs as well. And what we're currently seeing as well is that with today we saw that Biden has also added more tariffs such as for EVs. So it does seem like the tension between the two countries is increasing as things are going. And then also, as I said, sanctions. Sanctions are very important right now, especially with what's happening in the Middle East, which is causing tension there. And the sanctions that the United States currently do have on Iran and what this could possibly mean if the conflict continues.
Yeah. All right, so what you're saying is quite interesting. I'm going to take it back to Donald Trump and the tariffs, right? So looking back when Trump came into power, he obviously went and imposed tariffs against China, or tariffs for the United States against China, and his whole ideology was, United States for United States, right? And looking at the economy, if you look at China, China's really a big exporter to America. So what has been interesting to observe is that the U.S. economy, despite what's happening right now, which I'll delve into a little bit later, is still certainly robust as opposed to what we would have thought that if you impose tariffs on China, you're basically cutting off supply from one of your biggest producers of the electronics, EVs as such, right? So what do you think that the running of these tariffs post Biden and this current administration into the new administration, obviously it seems that Biden and Trump on the tariffs point of view, they are basically aligned to a certain degree, and we cannot forget the Middle East conflict, and at the same time also there is still conflict in Europe and Russia and Ukraine, which is obviously affecting the United States economy, and in addition to that the global economy. So the key question here, I don't mean to go in a circle, is do you think that in the long term this will be sustainable?
We have seen, the blowback of these tariffs. We see it in Apple's results, which have come out recently, where they are losing favor in China, number one. And we're all seeing that, when it comes to production of their specific, like the iPhone and etc., most of it was done in China. However, now they're looking to move away. So business is not going as usual. And what's hurting a lot of these businesses also, they have to now move to different places to try and get the manufacturing, because China was the manufacturer of the world once upon, not so long ago. So yes, I do think that the tariffs are, going to hinder a bit. However, what the U.S. has also done is now they've been pumping a lot of money into the economy. So I think that could be a play even with Trump. And you're correctly in saying that when it comes to U.S.-China relations. In this case in particular, the two presidents, often with one former and the current president, they are in alignment in terms of America first.
Okay, then just one other point. Do you think that, if we're looking at US crude, the conflict in the Middle East, bodes well for, US oil? So I'm not speaking primarily to Brent, because if we impose sanctions in the Middle East, we know how that will affect, oil, and that commodity, we know is quite volatile. Do you think that there is maybe a bit of arrogance in the United States from an oil perspective specifically in imposing, these sanctions in the Middle East and also in Russia, because obviously they do have oil that side?
It actually is, right? So the one thing that the US, two things that they have going in their favor. Number one is that oil or commodities are traded in the dollar, right? And with with that being said, at least they still benefiting from that. However, there is a bit of arrogance, correctly said, especially when you are looking at in the Middle East, right? The OPEC Plus have decided that they're going to cut their production, so there's less oil available. And during 2022 or 2021, 2022, when after COVID, a lot of the oil price was actually booming, and now what we are also seeing is that the reserves in the US, they had to dive into those, and in diving into that, they no longer have that strategic reserve to be able to be as fast as they are. And recently, as far as March, they were buying more oil to fill up those reserves. However, right now, what we are seeing as well is that Biden announced that they're no longer going to be filling up those reserves. So oil is going to be a very critical thing going forward, and how the U.S. goes about managing the relationships with OPEC Plus and Iran and what's happening in the Middle East is going to be quite important.
Okay. No, that's very interesting. Thank you for the insights there. I want to pivot a little bit. I mean, we have focused on, the tariffs. We have focused on, the tension globally, Middle East, Europe, etc. But I want to just, speak to the lay of the land currently, right? And we'll start off obviously with the United States, and then just go into other regions. So it is interesting to see that, post-COVID, what we've been discussing and seeing has been inflation, right? So you see that what COVID caused was the fact that, there was an oversupply of consumer goods and not enough people, investing or buying into those consumer goods. And then the knock-on effect to that had been when the world opened up, everyone had a little bit more cash on their hands, and they started spending a lot. And looking at the United States, it also had their stimulus plans. While during COVID, where there was no criteria as to who gets stimuli, but everyone was getting stimuli, which then led to housing prices actually shooting up because interest rates at that point in time were quite low, and everyone is not spending as much on, let's call it, niceties. So they're maybe investing in housing and things like that, right? So that's another key factor that we're looking at currently where the world is. Another point that we are looking at, in the global economy, in addition to the conflicts that we did mention, is going back to China. So we see that China had the longest COVID restriction laws, and China is a big player in the world economy. It is the second largest economy in the world, right? Really competing with other superpower being the United States. So we would have thought that when COVID ended and China reopened, we would have thought that we're going to see globally the global economy grow at a faster pace, and we see that China actually is not growing as fast as we anticipated. And I mean, we're looking at post 2022 up until this point. I know in the past couple of months, the first quarter of this year, they are starting to pivot, right? So my interest here is I want to just delve into, how these few elements that I've just mentioned, how they're affecting us today, right? And I want to really focus on the United States as a starting point, right? So I'm of the view that the United States leads what happens in other global economies, right? Whether that be inflation, whether that be interest rates, whether that be we're looking at the dollar, because I mean that is the most commonly used currency, right? And we have been dealing with, if you look at the news the past year, 2 years, all we hear is about inflation, interest rates, etc., right? But what I find fascinating about the United States is that yes, they do have a 2% target for inflation, and they are above that target. And we all thought, eventually we're going to go into a recession. In order for the United States and the rest of the global economy to combat inflation, we've been seeing hectic rises in interest rates. I mean, there was a slight shake in the United States where we had, slight bank failures. And, that was a red flag. If we go back to 07, 08, when, the financial crisis where institutions crashed, I was of the view that, when we start seeing the smaller banks crashing, that we might be heading down that path, But we see that the United States, their job numbers are positive. We see that inflation does seem to be tapering to a certain degree, right? But as much as the job numbers are so robust, inflation is tapering currently. However, there is quite an interesting relationship there, because you'd assume that with the numbers, with the job numbers that we're seeing, I think it's averaging at 300,000 jobs per month to date, at least fortunately for the United States this last month. It's funny that I say fortunately. This last month, their job numbers actually came in lower than they expected. And these job numbers have been key to us cutting, interest rates and fighting inflation, right? So how is it, just your opinion, I think, is that how is it possible that, the economy is growing, the job numbers are growing, and, inflation has been a very big battle, which we're suffering from. Interest rates are quite high, especially for, a modernized country like the United States. How is it that, in your view, that the economy, why is that the economy is, growing at the pace that it's growing? Because I would have been of the view, and fundamentally and logically, that the economy actually should be shaken based on, the different factors: the high inflation, consistently high inflation, the high interest rates, which, the Fed, Jerome Powell, is stating that, they're going to keep them at this rate for the near term. We're not expecting any rate cuts anytime soon, as we anticipated this quarter, this beginning of the year.
That's a good one, especially when it comes to the United States. I think the big issue is that they're able to print money, and I think that has been helping many businesses to be able to go through these different phases. Rightfully so, as you're saying, inflation has been sticky, even though it has been increasing, especially from last year or 2022, where it reached its peak. Right now, it's still struggling to go below the 3% mark, even though we had some good times where inflation numbers were, dropping aggressively, and it's known that inflation is sticky. Now, in my point of view, I think around from these high levels of interest rates, we are anticipating a slower, it's going to be sticky for a very long time. And even though, as you said, the job numbers have been hot, green cooler at least in the last print at around 175,000. It is showing, at least on the job front, that it is starting to now cool off. However, it could bounce back up in the next print, so it's not cast as though. Beginning of the year, before when everyone was thinking in March or June we're going to have our first rate cuts, the job numbers were all actually cool. So now I think what is helping the United States business lab or the economy in terms of stock markets, we are seeing a lot of, there's mention of shrinkflation. And what that basically is that companies are using less material or less product, but selling it at either elevated prices or at certain costs. And I think a key thing that a lot of people don't take into consideration is that inflation is not the rate, it's not how expensive things are going. It's rather that the pace in which things are getting more expensive, like you said. And that's, I think, is what we also need to still keep into consideration, is that things are still quite expensive. I think the key thing, which we go back then to the oil reserves, that's been helping at least in terms of inflation numbers cool off recently, is that the reserves helped with inflation numbers because they made the oil prices drop a bit more with the oil reserves that they have. So I think that going forward is a positive, and that's how they have been managing. But as I said, right now, the US is no longer buying any more oil. They find it that the oil price is too expensive, so they can't replenish their reserves. And that is it's gonna be very tricky. If you don't have reserves, how do you then keep the oil price or price at the pump at the max level?
Exactly, and it's really, it's a very competitive space because you're competing with OPEC, and in my view, they have unlimited reserves, but that's a story for another day. And just speaking to that sticky number that you mentioned, I think from a consumer perspective, I think what is really affecting the US is that the housing thing that I mentioned is a key factor to what's making inflation be a bit more sticky.
Okay.
Because a lot of people, have invested into homes and things like that. But an interesting one that I which I came across, is that vehicle insurance actually is really driving up, or not really driving up, keeping that number quite sticky, because I think year on year vehicle insurance in the United States is increased by 22.5%. And if we're looking at an economy with over 400 million people, imagine how many cars are in the economy. So you can see how that effect has. But I want to just pivot and move away from the United States and speak to Europe, actually.
Okay.
So the United States, we are seeing sticky inflation, we are seeing higher rates for longer, and so on and so forth. So the status quo as it stands remains the same. Right? But in Europe, the inverse seems to be happening. Right? If you look at the Eurozone, is that I think the last 7 prints on inflation have been coming in cooler. We are seeing countries such as Switzerland, Sweden, some European countries starting to actually cut rates. I know that the ECB is of the view that they are going to be cutting rates soon. But that also then poses a question to me, in that because the superpower that is the United States, that basically dominates or leads the global economy, is it having interest rates this high. For the European citizen or the Euro consumer, it's great that the interest rates are decreasing, right? The euro is also quite strong as it is. I don't know if it's probably think slightly overpriced in my opinion. However, the fact that they are looking to decrease the interest rates, does that, it's just a question out there, does that mean that the euro dollar is too strong? Because that's obviously going to have a knock-on effect on euro dollar. So you're going to see the weakening in the euro. But the United States then also becomes attractive to the European consumer, in that as an investor or a trader, you would want to invest where interest rates are high. So as much as those that have invested have had some nice returns, however, now as these interest rates, go down, there is a risk that there's going to be a lot of Europe coming out of Europe, and then there is the risk of a massive divergence between America and the European zone. Because what tends to happen is that if they diverge too far away from the United States, that can have an adverse effect on their own economy, despite their numbers being quite positive. I don't know if you have any thoughts on that.
My thoughts on that, I think the Eurozone is quite a unique, in a unique position, as you rightly say. I think only time can tell, because even with the Eurozone, they have very, with winter now coming on they just left winter. What the issue is there is that they're also facing a bit of issues with where they get in their natural gas and also commodities as a whole, which is the likes of Russia and the tense relationship they have there. So I think that is going to be quite interesting to see how things go. The ECB chair did say that they're not really going to piggyback of what America is doing, so they're going to be doing what's best for the Eurozone. I think the key thing is, are they still going to be able to manage inflation in those different places? I think that's going to be the key factor. However, if you are looking at things like GDP in the likes of Germany, which is now starting to seemingly look more positive, that is going to be a key factor, especially for that Eurozone. And obviously now we also have the effects of Brexit, which is finally starting to come into fruition and bring more tension into the zone. So I think that is going to be something we want to look at going forward.
And it's interesting that you mentioned, Germany. I think Germany currently is the biggest economy in Europe, and just looking at, forgetting the actual country now, but in that, if you're looking at the EU, right? In 2023, they actually escaped a technical recession just by the cusp. I mean, they had no negative growth, but they had no growth. It was at 0%. And then we also see that year on year, their GDP last year actually grew by 0.4%. I mean, under the circumstances, you do want to see, the number be ticking over. But yeah, the economy, the European Union in itself, you see that it is also starting to open up. We're seeing, manufacturing numbers become more positive. We're seeing that the labor market is also becoming more positive. So, I mean, going back to what you said is that they might not want to piggyback off, what the United States does, and as an individual entity or individual nation. So they are doing quite well, but it'll be very interesting to see in terms of how that transpire when they start cutting their rates, etc., and the United States is staying steadfast. It's just something to think about.
It definitely is, and I think what will primarily be a key factor in that issue is, going back to the topic, is what's happening in the global economy or geopolitically or rather, because right now it is seeming a bit of the agenda is seeming a bit more anti-globalization, which has been the case. I mean, previously we had a lot of globalization. Hence the formation, obviously, of the Eurozone, etc., and the relationships they had with partners. Now, looking at the Eurozone, I think another thing that we do need to take into consideration is the many conflicts and whether or not they're going to, not only on following the United States with interest rates, are they going to follow the United States in these downs against these different countries, such as China, such as Saudi Arabia, such as OPEC region, etc. What could end up hurting the Eurozone? You could see something like, if they then partner or marry whatever the United States does, it could hurt. I mean, as you saw with what happened in Russia, how that hurt the Eurozone as well. So I'm thinking that a key thing is going to be geopolitics in that sense, in that which sides they end up, do they not get involved at all, or do they pick a side? And in picking the side, that could then end up hurting them strategically for the United States, if they then, let's say, for example, with oil, they decide that they want to side with the United States, then they will have to get the oil from there.
Exactly.
However, the issue will be then the transporting fee, the costs of bringing the oil into the Eurozone.
Which can drive up inflation and as a knock-on effect. Yeah.
You know what I mean? So I think that's why in geopolitics right now is going to be very important, especially as we're going through these many elections across the world. This year is that as well as the year of the election. 80% of the population is actually going through the elections. This month in particular, we have a few interesting elections coming in. We have obviously South Africa that's going to be going through to the polls on the 29th of May. We also have the United Kingdom also going through elections this year. So I think that's going to be quite interesting. Now, going to the United Kingdom, I mean, they won some lightly as the Eurozone. They did actually get into a technical recession last year. Luckily, right now, we are seeing a nice pivot in the GDP numbers. And they've also had 3 prime ministers last year. So now we're all waiting to see how this affects that part of the region and how they are going to be able to continue growth. And that's why geopolitics is quite important for this period.
100%. I just want to just touch on the United Kingdom. It's interesting you use the word pivot. You can actually sometimes see that in how well the FTSE 100 is doing. I think it is almost at all-time highs. Haven't seen it perform the way it's been performing in a very long time. And I want to just come back to geopolitics. And you mentioned that South Africa is going through, we're going to go for elections just now in May. I think for me, it's always important to touch on home, right? South Africa is an interesting case. Just looking at, we spoke about, the Eurozone, we spoke about, touch on China a little bit, spoke about the United States. I think for South Africa, and as a person sitting in South Africa, it is important, at least to me and hopefully you, that we basically almost mirror what is happening in the United States. So as you can see, our inflation target has been between that 3 to 6%. However, we are at the high end of it, which is leading us to keep our interest rates quite high, right? And inflation in South Africa has been a bit loopy in that, it is going up and down, but at least it's not shooting up. There is a downward trajectory on that inflation rate. But going through, for us, I don't think that geopolitics are a big factor currently. They are a factor in the long run and previously, but political uncertainty is, a key point for the South African economy. I think we are facing load shedding, although we haven't had load shedding for a while now.
Knock on wood.
Knock on wood, exactly. We haven't had load shedding for now. We have a high unemployment, very low GDP, but I think at least in the positive is that we're not in a technical recession. So it's an interesting case to see, and it's always important, at least to me, just to keep an eye out to what's happening with the superpower, and then also what's happening, the political landscape with regards to, the knock-on effect on our economy, because I think if the South African economy at large, it is quite news sensitive, it is quite volatile, although there is obviously a lot of potential for the economy to grow post, all the issues that we're discussing.
I think South Africa is very unique, as you rightfully say, with everything that's happening. However, also if we are now looking purely at what's happening in the market, we have to also bring into consideration that majority of what's traded on the JSE is actually dual listed. So there's that factor into it. And what you also want to bring into it, what I also want to bring into attention is that it's the key thing with those dual listed companies is going to be what's happening with the dollar index in terms of how the brand is performing against the dollar. I mean, and luckily for us, we are also the resource, or unlikely or likely, we are a resource-heavy country. And with that, it means that we have to really, it goes back to the superpower. Look at what's happening there. So the dollar index for me, I think, is going to be the key factor, especially with our resources going out. Are we going to be getting more money for the resources we produce, and et cetera, et cetera? Do you have any thoughts maybe around what's happening with the dollar?
100%. So I'm going to touch on the dollar index, but also just because you did speak about resources, I think it's also important to note that China is also a big player when it comes to our commodities and resources. And, China's slowdown has had a big effect on our mining industry, our resource industry, our energy industry, because, we do export a lot of, goods that side of the world. And so just looking at the dollar index, so basically, the dollar index is just, so for those that don't know, what is the dollar index? It is the US dollar in relation to a basket of other major currencies, right? So if you're looking at the dollar index has really been performing super well, right? So with that being said, right, that has had a disadvantage, really enough, for the S&P 500 and US companies, but obviously the US companies are exporting their goods and services. So the stronger the dollar is, the less affordable it is for, their clientele, for the lack of a better term. But for us, as a commodity exporter, that, bodes well, because we are receiving, everything is quoted in dollars, and we are receiving dollars, right? So the dollar index, looking from a South African perspective, the stronger it is, the better it is for us from an export perspective. However, it does have a knock-on effect to the rand being relatively weak. We actually seen a bit of strength in the rand. RMB was sitting at like 18.40 by the time of this recording, at least it was. And that is also due to, after the job numbers we spoke about earlier, the 175,000 that you did mention there, as they've tapered down, we are seeing that a weakening in the dollar index. So the weakening in the dollar index means that, the dollar is, losing strength against mainly the euro and also the Great British Pound, GBP. And then naturally the rand is gaining strength, which is, I think, good in certain aspects. From an import perspective, it's great. From the perspective of, our commodities and our resource industry, not that great. It tapers the numbers a little bit down. But I think the dollar index is positive and negative depending on what lens you're looking at it. Because you'd think that maybe someone that is in the financial services industry, you would want the rand to be stronger, so you want a weakening in that dollar index versus, the dollar versus other major currencies. But if you're, in the mining sector, the energy sector, you are looking for that, strength in that dollar index, because, it affects your bottom line. So just looking at the dollar index and linking it back to South Africa, it is, for me, it shows how diversified our economy is and how it can be in terms of that. I think we do have quite a robust financial services industry. That's why I use that as an example. We also got quite a robust, although it goes through tough times from time to time, I think the mining industry or resource industry is quite volatile. And then from an American perspective, I want to take it back to there. What I learned was that, with the dollar index, right, a 10% rise in the dollar index, and a 10% rise in the dollar index leads to 3% shaved off S&P 500 companies in terms of their revenues.
Okay.
So once again, it is a very interesting what was I use? Dynamic to observe. So that is my thoughts in that the dollar index you just gotta, it depends what lens you're looking at a shop, right? So there's no positive or negative, because it's positive for some and negative for some, and once again, because of the US, the United States being such a superpower.
Okay. I think, I mean, like the touches of, especially with the financial industry and the resources industry, I think it would be terrible not to mention how good the resources industry has been performing well. Some players, unfortunately, you know, the likes of the platinum PGM groups, platinum group metals, they haven't been doing too well this year, even though we have been seeing a bit of a kick with the
Green shoots here and there.
however, the star of the show this year, if you may, has been gold.
100%.
And the thing, if you're looking at gold, you know, the price has been reaching all-time highs this whole year. And the nice thing about that is that we've been seeing the likes of, you know, and I mean, sorry, it has also been driven mainly by what's happening internationally with the geopolitics. We are seeing a lot of people running to gold as a safe haven. An interesting note as well, we saw that in China, consumers there have also been buying quite a bit of gold. We saw a jump in 26.7% when it comes to gold bars that the Chinese people in China have bought. So I think that also contributes to the rise in what's happening. But again, with the dollar index out, as we were saying, could be fluctuated this year. Do you believe that maybe gold could be a great safe haven? What are your thoughts around gold?
100%. I think gold really feeds into, you know, the entirety of our conversation, because we spoke of the ECB and the Eurozone potentially cutting interest rates. We're looking at the United States where they're holding for longer. We're looking at the different conflicts around the world. So as much as, you know, the economies have been quite good and, you know, they have really blazed the trail under really, really tough circumstances, I see gold being traded even some more. I see a potential rise in the value of gold to even further new time highs. Because obviously we're now in all-time highs of gold, and that's just due to, you know, all this uncertainty. We do not really know that, you know, where is that global economy going. You added you know, the elections in the United States. We don't know that come November, what happens? What are the new policies that are going to come through from that side? So that's why you see, you know, the gold doing what it's doing. Because gold is really a traditionalist type precious metal, right? Like you alluded to, it is an inflation hedge. It is, well, I mean, you did say safe haven, but I just want to delve into it a little bit further. It is, you know, a hedge against inflation. It is a hedge against, I wouldn't call it a hedge, but can protect you against, you know, any political or global uncertainty. So what tends to happen in markets, at least in my career thus far, is that every single time you see things that are a bit gloomy or it's a bit grey, you know, people dive into, you know, buying bullion, right? And this is a trend I foresee, in my opinion, going into, well, in the second quarter of the year, into the second, third, and the final quarter of the year. And it all depends on what actually happens, you know, in mainly the United States, as the key driver to a lot of these movements that we're seeing. And then also what happens politically with the election in November, and then also don't know what's going to happen with the conflict in the Middle East. I do strongly believe, in my opinion, that as much as earlier in our conversation we touched on Ukraine and Russia, I think that has been priced in already in the market. So I don't think it is as, from a geopolitical perspective, it is as sensitive to, you know, the markets are not as sensitive to what's going on there as opposed to what's happening in the Middle East currently. And how gold affect the dollar index? Naturally, the the dollar and gold actually have an inverse relationship.
Okay.
Because the dollar, people also look at it as a safe haven to a certain degree. So what you note that is that when the gold price is going down, the dollar strengthens. And when the dollar is losing, losing strength against, a basket of many, against many different currencies, you see, the gold price actually is strengthening as well. So it is also something that's interesting to watch because I wouldn't say traditionally, but more often than not, it's either people are diving into gold, but gold really when it's too uncertain, or they're diving into the greenback being the dollar. So something very interesting for you to observe as well.
It is definitely something interesting, and I think what we also mainly around chats, but there is one example, is that historically speaking, if we go, let's say, into the 60s Nixon era, the dollar actually was backed by gold, in fact, gold reserves. However, they got rid of that. And now we are seeing African countries now looking at backing their currency with gold. A good example is the new announcement of the ZEC in Zimbabwe. So I think, as you say, as a safe haven, just to hedge a bit of both, that could be a thing. However, I mean, in terms of the ZEC, it doesn't seem like many other countries are doing that right now. But as you say, if uncertainty does continue, we could see that being the main focus. Another thing for me personally that I want to touch on is then anti-globalization. We have seen, you mentioned Brexit a bit earlier. Do you reckon that United States starting things off for Brexit rather than United States first? Would that trend continue across the board, especially, as I said, with these elections? We also saw Argentina earlier this year, where the Argentinian president was quite aggressive as well. What's your thoughts in terms of the anti-globalization?
So, interesting question there, Odwa. I don't think that it is a trend that we'll see going forward. And my reasoning behind that, right, it's very high level, would be if we go back in time, I don't have a date, but if we go back in time, we drove towards globalization, right? That is how the world economy became what it is, and we're living in a society where everything is accessible. I mean, you could have business with someone in the UK without ever seeing the person. You could. The world, as much as there are borders, there's also an element of borderlessness from an economy perspective, right? And interesting countries. I'm not privy to Argentina, I must be honest, but if interesting points looking at the United States, I think the United States has shown that they can be America first and America for America, because how the economy is performing under extreme circumstances currently, we see the economy still ticking with those job numbers, wage inflation and things like that. We haven't seen a recession and so on and so forth, right? But on the flip side, if we look at Brexit, what that did for, the United Kingdom was not positive. I mean, as we mentioned or alluded to earlier, that we spoke about the EU, but UK did go through a recession. And would the UK have gone through, we don't know, but would the UK have gone through a recession if they were part of the EU? Or they would have been shielded by, all the different nations in order to keep that economy moving forward, right? So using, the United Kingdom as an example, right? In my opinion, it's that, and it's purely speculative, is that I don't think that it is something we are yet to, see going forward or anytime soon. And I think it will be unfair to use another country here, a country like China or a country like the United States, because those economies are massive. And looking even from a numbers perspective, population perspective, they have, opinion once again, they have enough to drive their own economies without technically the need for someone else. But I think the rest of the world, South Africa included, we do need globalization. And we do need to be bringing it back to South Africa. We do need to import products from certain countries. We do need to export those products out to different countries. I mean, it's all good to have all the platinum in the world, but
if no one buys it,
exactly, what is the point of having a platinum? Exactly. So I think that is my view on anti-globalization. However, we are seeing a massive drive, like you said, in anti-globalization because of the different wars that we're seeing, etc., and Brexit and America for America, a lot of narrative around it. But I am very curious to see how fruitful will that be going forward.
100%. I think last topic, we have touched a bit on what's happening in the Middle East. What I want to do is just touch a bit more into that specific sector. I think the Middle East is quite interesting right now. Firstly, if we look at Saudi Arabia, or mainly most of the OPEC members,
Yes.
we are seeing a bit diversification from being an oil-only country. I mean, we saw Saudi Arabia buying some sports teams, bringing tourism into the region. They are also looking now at renewable energy and being more of a smart society. So I think that to speak on oil being a focus, they are doing quite well on that front. With the escalation of what's happening in the Middle East, it could end up going totally haywire. So now I just want to touch on the worst possible scenario or worst case scenario. Now, focusing back to the worst case scenario that could possibly get in the Middle East, we are seeing escalations right now, heavy protests in the United States, and I think going back to our first topic, that could affect what's happening with the election. We are also now seeing that Israel is saying that they're going to continue on their own, meaning that whether they get support or not, they're still going to continue with what they're doing in Gaza. So I think that, not to think that, but I was thinking, what are your thoughts if the Middle East tensions escalate to high levels?
So I think what will go back to, just my opinion, back to square one, and what square one is, those nations, the Middle Eastern nations, will have an influence in the world through oil. So definitely we might have to put, the new diversification, smart cities, tourism, the football, etc., and back to what we know and why, for them, what they deem success is, right? Which is the OPEC agreements and pushing out oil. So it is a bit of a catch-22 for them in that, they are looking to, and funny enough, it is because of globalization, what they're looking to do is become more global. I know that in Saudi and some economies in the Middle East are even looking to relax their laws on alcohol and things like that, just to push and drive into, that region. That's why, they're bidding for soccer World Cups, and things like that, right? But it is unfortunate, or I don't know if the word is unfortunate, but that this is happening while there is conflict. So I think the best approach, right, because you cannot predict when the conflict will end and if it does end, or how long it will last for. So we would basically have to, take a wait and see approach. That's, what I would, that's how I would go about it, because I can't put a finger on it. I can only speculate because every day it's just a changing day.
No, 100%. I think that does cover a lot about what's happening right now in the global politics.
All right, thanks, Otto, for this insightful conversation. Looking forward to it in our next webinar. Having said that, if anyone is interested in joining in on the action and what's happening in the global markets, feel free to open a Tribe account. We are able to offer you a trading and an investment account.